What's up, everyone? Welcome to the Clearly Crypto YouTube channel. My name's Tyler. Glad to have you guys back. This is the channel where we want to know more, grow more, and reap the benefits from it. So glad to have you guys here. I see that our channel is growing just a little bit. We have 3 more subscribers from yesterday, so I'm very grateful for that. Make sure to get in here and get subscribed if you're not. I come out with this daily content about crypto, as I said, daily. I'm going to try to keep it daily for you guys. That way we can keep up with the news. I know a lot of people out there don't like to read themselves. I love to do it myself, and I love to teach others. So that's what this channel is about. Sounds like something that interests you. I'd love for you to stick around. Make sure to follow me over on Twitter as well. As you can see, my username is Tyler Boyden. That's my name, and you can find me on Twitter that way. As you can see, I like to share different crypto things as well as help share my opinion on the crypto space and share different things that I'm learning about reading stock charts. That's one of the big things that I'm trying to learn myself and that I want to teach to the community. So if you're trying to be somebody that can read, if you want to be somebody that can do TA, the technical analysis for charts, this channel is going to be one that's going to help along with that as I learn along myself. So this is just one of the threads I put out, just talking about the 200 moving average on charts. If you guys aren't into stocks, I'm sure that you're not going to know anything about that, but that's perfectly fine. I'm a beginner myself, so this is a channel to start out with if you want to find somewhere to start with stocks. For today, I have plenty of news for you guys. I just noticed before recording this that my mouse doesn't show up in the video. It only shows what I'm doing on here. So as you can see, I'm highlighting right here, but you can't actually see the mouse. So that's pretty scary and cool at the same time. So I'll make sure that I definitely show you guys where I'm looking at as I highlight. For today's episode, I'm going to be talking about a little bit about Coinbase, Ethereum, since the Ethereum merge is coming up. For those of you that don't know, it's September 15th for the merge. A little bit about CBDCs, our central banks of digital currency, Solana, some more about our blockchains, and a little bit of fun there at the end. So let's get started. The first article here that I want to go over, Coinbase executive explains why the US-based crypto exchange will beat out competition like Binance and FTX. So if you watched my video yesterday, I encourage you to do so. I talked a little bit about Coinbase and how they're actually going to be pausing. They're going to be pausing their payments and withdrawals for Ethereum soon. They're going to be doing that they said it was to actually help with the volatility that's going to be coming just to protect everybody. Makes me a little bit worried about this, and I was surprised to see them come out with this article saying how it's going to be beating out their competition. One of the main reasons why I did want to pull up this article is I didn't know this. I didn't know if you guys knew as well. This quote here really caught my eye with the information that's in it. I wanted to share it with you guys. If you're a Coinbase customer, if you have a Coinbase account, we try to make it simple and easy for you to access all our products and services, so it's not just buying and selling crypto. But if you want to stake your crypto, if you want to send your crypto, receive crypto, if you want to use a debit card to pay someone, if you want to buy an NFT, non-fungible token, for those of you that don't know, if you want to participate in your E3 game or any other interesting application, that was the part that really caught my eye. That participate in your E3 game. I'm going to have to look a little bit more into this. If any of you guys know more information on that, definitely drop it down in the comments. I would definitely like to know more about that. I had no clue that your Coinbase account, if you have a Coinbase account, and you want to participate in E3 gaming, it's saying that you'll be able to do this with your Coinbase account. So, like I said, if you know about that, definitely leave it down in the comments. I'm going to look a little bit more into it and put it into a future video for you guys. Moving on from that, JP Morgan thinks that the Ethereum merge will greatly benefit Coinbase. This is the other article that I wanted to show you guys. It shows that JP Morgan has kind of like a play in Coinbase in making a little bit of money off of this Ethereum merge. Now they do have a typo in here. I don't want you guys to get confused. They are showing August 15th for the Ethereum blockchain merge. But just so you guys know, it's September 15th. Now, along with that, that's whenever they're going to have it merge. It's going to be it's going to be the start of the merge. It's going to be completed finally in early 2023. Make sure to get a little bit more info. Do your own research on that, definitely. That way you can know all the details on that. I'll probably do a video in the future specifically about the merge before it comes out. That way everybody can have kind of, I can share all that same info with you guys. Because I know it's a lot to soak in. There's quite a bit of info dealing with the merge. What I wanted to point out with this, especially with this quote, and it's something that not everybody thinks about whenever they get into crypto as far as getting it to pump up, but it's definitely something that needs to happen in order for cryptocurrency to be taken seriously. It states in here that one of the people over at JP Morgan, we see the staking revenue opportunity bigger proportionally than the income opportunity, given we expect institutional staking clients will contribute meaningfully to ETH staking revenue, but much less so for institutional customers. The vast majority of the economics remains with retail. So what they're saying is that they're seeing a big opportunity to bring in their institutional investors. As you know, JP Morgan, they have tons of institutional investors along with them, since they are an investment company. So they'll be able to bring those clients over into the Ethereum merge. And I think what they're basically doing is charging their clients fees or taking some of the profit. Like if you went over to your bank, you got so much percentage back on your deposit. Like with the savings account, you get so much of a percentage APY. I believe that's what they're doing with them. They're just kind of trimming off the top. That way they can make some money as well. They say, which is interesting in here, that JP Morgan also is giving Coinbase shares a neutral rating and a $64 price target. So with that, they're saying that they see some pretty good money, some pretty good opportunities here with Coinbase to make some money, but they're not exactly valuing it very high, and they're saying that they're even giving it a neutral rating. So with this, it's kind of good and bad for Coinbase. I know with that, Coinbase, in my opinion, isn't an exchange that everybody should be using. I myself, I use crypto.com. I know a lot of people talk about Binance.us. They're a little bit more restrictive in the United States, unlike everywhere else. I know that they're trying to get into Canada a little bit more as well, but that's beside the fact. I definitely don't recommend getting into Coinbase with everything that they're doing, especially with them pausing the withdrawals from your Ethereum until the merge is completely done. So going along with the Ethereum merge, Ethereum tosses Bitcoin to take top spot in this area. So they don't exactly explain what area this is, but this is basically to get you a little bit more excited about Ethereum. I know that I just put a little bit of FUD on it, but with Ethereum, there is plenty to look forward to. It is still a wonderful, wonderful blockchain that has tons being built on it. But for this is basically showing that for the first time, Ethereum surpasses Bitcoin in open interest on option trading. So for those of you guys that aren't into stocks, into all the lingo for it, options trading is basically you betting whether the stock's going to be going up or going down. You have a target price, what they call a strike price that you have set on where you expect the stock to go. And then you're betting on it. You're putting so much money up, and then as it gets closer or further away from that price is how much you're going to be getting back. This is saying that there's more of those contracts out there. This is saying that there's more people betting on ETH, whether it's good or bad. There's just more people betting on ETH than they are on Bitcoin right now, just showing how much this merge is bringing attention towards Ethereum. Moving on from that, and I'm trying to go through this a little bit quicker than the last video. I don't want it to be another 20, 30-minute video. I want my videos to be a little bit shorter for you guys. I know everybody has busy lives. So moving on, 3 strategies investors might use to trade the upcoming Ethereum merge. This was a really cool article that I found. This is one that I've seen. I think I've seen Crypto Mason go over something like this that talked about the same things. But since then, there have been other developments with Ethereum that are pretty cool. Let's see. No, that wasn't it. I forgot to save the article, but there is talk of Ethereum futures to come soon. There is, or no, Ethereum spot. Oh, what was it? Ethereum options. I'm so very sorry. That's what it was. I wish I would have saved the article, but Ethereum options is due to be coming with the Chicago mechanized. Oh, I always forget it. It's the CME. It's the same people that you can go on to TradingView and you can view the Bitcoin futures. You can go on there and see the Ethereum futures with them, and they're soon going to be also offering Ethereum options right before the merge. So that's something that's going to go along with these strategies. So really, that's 4 strategies for you guys. So if you are watching this channel, that's a little extra tip for you guys. That's something that you'll be able to do right before the merge and throughout it. That way, with options, it does offer quite a bit more risk, but along with that risk, you have quite a bit more profit that can be made. But along with this article, the first option that you do have is to hodl ETH to earn the expected hard fork token. So what this is saying is basically that you're going to be holding your ETH in your account, you're going to be buying it now, and you're just going to hold it throughout the merge. You're just going to wait until a time whenever ETH gets up past its rallying point. Just to let you know, it is going through what they call a triple halving after the September 15th, so it is going to go way down. But I do expect it to bounce up after that. It's going to have quite a bit of volatility. So with this, I know with mine, I'm kind of playing the market as it moves up as I can. I'm trying to figure out where those measured moves are. That way I can kind of gain little 2 to 3% here and there as it goes up, and then I'm going to hold it in there close to the merge. And once I see a little bit of a peak, I'm going to try to get out, and hopefully that works out for me. No financial advice for you guys, though. Just wanted to share what I'm doing. So that first thing is to just hodl your ETH until it gets up there. Next thing that you can do, and this is a little bit more savvy. I don't recommend it myself. It's not something that I'm going to be doing anytime soon because it does require quite a bit of leverage on your end. Is to long or ETH or short futures, which that means that you're basically buying or selling stocks. You're basically doing it on credit. So you're putting up collateral, and on those different exchanges that allow you to do this, you put up your collateral, and then they allow you to leverage a certain amount of money based on how much collateral you put up. There's a lot more to it, which I'll probably do a video on this as well as I get into it myself, because I am going to be doing some shorting in the future whenever we're in these bear markets. But with that, it's basically, say you're shorting something, you're going to be selling the stock ahead of time. So you'll sell it at whatever price that it's at right now. You're hoping that the market's going to go down. That way you're in a negative. So you've sold stock that you don't have, so you technically have like negative 100 stock. That means that you have to buy stock back so that you can balance that out. So you're hoping that the stock will go down to a certain point. Hopefully you have an actual target for yourself. You're hoping it'll go down that way whenever you buy back the 100 stock. It'll be at a lower price than you sold the amount for it, and that's how you get the profit out of that. So that's how you would long or short futures. Again, if you're in the United States, that is a little harder to do. I know people have to get like VPNs in order to get that done. That way it shows you outside of the US, and then even with that, you want to be careful because it's kind of iffy with your taxes. You definitely want to be careful with what you're doing with cryptocurrency. Definitely do as much research as you can. That way you're not getting in trouble. So the third one that has in here is that you can stay in stable coins and just trade the trend. And this is the one that I was talking about. This is what I'm doing currently, is I'm kind of going off of the market hype and sentiment. I'm just trying to judge where people are at, go by the crypto fear and greed index. I mean, you want to use a ton of indicators whenever you're trying to trade like this because it is pretty risky. I mean, with this, at any point, this merge, it could be these institutional investors have gotten enough of their profit out of this and they just decide to sell the rest of it until it completely dumps after the merge. So, I mean, you got to make sure to know as much as you can whenever you're doing it this way. This is right above the spot and short trading. So you definitely want to be careful. If you're a beginner, I definitely recommend the HODL method, and then just kind of, watch the market as it goes along. Definitely set targets. That's one thing that I want to beat into people's heads is whenever you're getting into any market, stocks or crypto, you want to have targets set. Now moving on from this, like I said, I want to try to make these a little bit shorter videos, so sorry I'm rambling on. Ethereum decentralization at greater risk as Amazon hosts 52% of all nodes at data centers. So I wanted to bring this up just as a little bit more of to show you guys the risk that comes along with this. And this is just kind of showing how Amazon has a big hold over the nodes. It's the host nodes that are on Ethereum. And let me see here. And if I were to go over to the release study, I believe it is, we can show this. Yep, as you can see here, Ethereum hosted nodes, which it even has, which is really cool. I looked a little bit more into this. Where was it down here? If you go over to validators.app, validators.app, oh, there's an app. This will actually show you that same information. So you can go down here, or not down here. Where did I go with this? Getting started. Okay, day 6. Oh man. Where did I go with this? Was this the other one? No, this might be the other one. Alright, what was that first website? So ethernodes.org. That's what it was. So very sorry, guys. Alright, so ethernodes.org. Okay, so this was a really cool website. As you can see here, we can see all the different stuff. So you can go over to US, and it'll show you all the different nodes in the US. You can go over to the sync system, the OS system, go over to network types. That's where we want to go. You can see hosting, and it will show Amazon at about that 52%. So this is just to show you guys that Ethereum is not just completely decentralized. Amazon does hold 51% of the nodes out there. So, I mean, if Amazon were to go down, heaven forbid, if they decided, if somebody took over Amazon and had some malicious intent towards Ethereum, that's a big chunk of nodes that taking over right there. So yeah, it's something that I wanted to bring to your attention. That way you're not just all hyped up about the merge. You're definitely thinking about it from different angles. So moving on from Ethereum, we have the CBDC information. The first thing that I wanted to go over is how the feds are adding new layer of bureaucracy for U.S. banks engaging in crypto activities. Now, this is basically just saying that they're trying to add more stuff for the banks to do in order for them to get things done. Where was it? Let's see. They want to make sure that the banks actually come through and, let's see. Letter signed by the directors. Applies to all banks, applies to all banks. Oh. Supervised by the Fed with no threshold of minimum assets. So any banks trying to get into crypto, this goes towards them. And this is basically just saying that they have to, there it is, okay. So the letter's real call to action was the instruction that banks should notify their Fed supervisor contracts in advance of their plans planned activity with crypto. Banks that are already engaged in such activities should provide prompt retrospective notification so that they can receive feedback. So this is just the federal government trying to dig into our market a little bit more. They're trying to make it more centralized. They're trying to bring up more things that these banks are going to have to do, that they're going to have to go through the federal government to get things done. And this is just going to slow down the process, in my opinion. Moving on from that, the CBDCs, only solution to smooth continuation of the monetary system, ECB, and the ECB is European Central Bank. Right here, as you can see, they said that the introduction of digital cash in the form of central bank digital currencies appears to be the only solution that will guarantee a smooth continuation of the current monetary system. And for those of you guys that don't really know what central bank digital currencies are, it's basically the government. It's them creating the new bank reserve as a digital currency. That's what this is going to be. It's basically going to be the Federal Reserve as a digital currency. It's just them taking over the monetary system once again. You can see throughout here that they're just saying that they're going to have to use crypto along with their system, which is crazy. That they're wanting to use that they're just wanting to centralize a decentralized thing. And with this, like it says, let's see, in the second paper devoted to crypto issues released by the ECB this month, previously the central bank compared the cross-border payment potential of CBDC, Bitcoin, and stablecoin coming out in favor of CBDC. So, I mean, we're going to have this happen, guys. The ISO 20022, that happens in November. We're going to slowly have the monetary system switch over to these CBDCs, in my opinion. You can go to this cool website called CBDCtracker.org. You can see up here in the URL. And this shows what's happening as far as CBDCs. You can see the ones that have been canceled, the countries that are just in research. As you can see, the United States is just in the research phase. These other ones have proof of concept where they're actually using digital currencies. You can see that they have an Australia CBDC already over here. They have the, where was it, Thailand CBDC over here. Digital real, proof of concept. They have tons of them on here. So you can see that this is something that's starting to happen. It is going to be in the monetary system. It's not just going to be like, you know, your grandma's using XRP. No, it's going to be something that integrates fluently to where people don't really notice, but it's just going to work a lot faster. And I mean, the rich are going to get rich off of it, more rich off of this, unfortunately. I mean, in my opinion, it's not really unfortunately. They worked for it, a lot of them, so. I mean, it's how you feel on that, different perspectives. Alright, so moving on from that, don't want to stick on the bad stuff too long. I do want to bring this up because this was really awesome. This was a great idea that I saw in this article, and props to Solana for doing this. Solana-based Phantom Wallet introduces the Burn NFTs mechanism to help users remove spam NFTs. So this was really cool to see that that the Phantom Wallet is going to be adding this as a bonus, as an added bonus when you burn those unwanted NFTs. You even make some SOL in the process. So down here, I'm going to play this for you guys to show you a little bit. It's basically what I read in their article for this. It's basically giving you the SOL that was the rent fee for that space in their protocol. So the amount of SOL that they had to pay just to keep that rent space for the NFT is what you'll be getting out of it. So the people that are having trouble with getting NFTs that are, like I said, like it's saying right here, to remove unwanted wallet spam. So people out there are getting NFTs for free. They're clicking on the NFTs, messing with them, Maybe it shows something that you really want to sell. You got a new Bored Ape suddenly in there, so you want to sell it to make millions of dollars. And whenever you try to sell it, it doesn't go through. What it actually does is it's going to steal everything in your wallet or certain things. And that's what's happening to a lot of people is they're getting scammed by things being sent to them for free in their wallets. And it's not just NFTs, it's even different tokens just being sent out. One of the reasons why I like Hashback Wallet is amazing because you can't be sent different tokens just randomly. You have to actually put that token into here. And I'll show that in a later video in the future how Hashpack works exactly because it's an amazing wallet to have, especially if you're into Hedera Hashgraph. HBAR is an amazing token. If you haven't looked into it, you need to. DAGs are an amazing system to use. Um, Now, moving on from this, like I said, Solana, they do have a lot of problems with their blockchain going down, but as far as this was a really innovative thing to do. I'm really happy to start seeing this happen, and I'm hoping that a lot of other wallets will implement this. So now, moving on from that, Blockchain Investor presents Master Plan for Crypto Recovery. I wanted to bring this up because it was really cool to read about basically the history of Animoca Brands. For those of you guys that don't know, Animoca Brands is huge, um, a, a huge brand in the crypto verse. You can see down here back in 2018, it started up as the owner of CryptoKitties, a Pokemon-like game with virtual cats that can be bought and sold with digital money. It was pretty cool to hear that it started out just as something that's small. With it built into something pretty huge. For those of you that don't know, it's in cahoots with different things like Axie's Infinity, Sandbox, Dapper Labs. It even includes NFT projects in OpenSea. I believe that they're backing OpenSea as one of their investors as well. Correct me if I'm wrong down in the comments. But what I really want to bring this up for, in this article, it also says Animoca Brands has expressed the desire to go public in the next 2 to 3 years. However, it depends on what form crypto recovery will take and how soon. Whether that takes 2, 3 years, 5 years, this is something that's amazing to see. For those of you that don't know, an initial public offering for these companies to go public is an amazing thing. It's going to make that brand obtain so much capital so that they can do so much with their brand. But not only that, it gives us an option to get in the company if it's something that you believe in. If you like all the different things that they're investing in and you want to actually get into Animoca to invest in them and grow your portfolio with them, this is a way that you're going to be able to do it whenever they bring the company public and they're able to sell you shares of the actual company. So that was really cool. I wanted to bring that up for you guys. Moving on from that, I wanted to bring this up because it was really funny to see, just as a kind of a comic relief for you guys. I know that we've been pretty serious, some ups and downs in this video. This was really funny to see. It's also a big reminder that you guys need to remember that crypto is very volatile. Anything can happen with this. I've seen everything from people dying and not being able to get millions of Bitcoin out because nobody knows their password to now this. It says that a former hedge fund manager alleges he lost $450,000 in crypto from a porn virus. That's some crazy stuff to hear about. It just says down here that it was due to a downloading a pornography file. I think that he basically lost the money and he's just wanting to say this the kind of save face. I know that not everybody would kind of think of this as a way to do it, but I would rather be laughed at for it being an accident than actually being the person that did it on purpose and lost all that money. But yeah, like I said, just wanted to bring this up as a reminder of the risk that comes along with it, as well as kind of the funny things that do happen in the cryptoverse. But that's the end of this video. Thank you guys so much for sticking around. Make sure to subscribe if you're not. and I'll see you next time. Love you guys.